And so I wouldn't be surprised to see, well over 50,000 this year. You hear some of these really high targets, and it is hard to put those aside.
Hello there from Bedford in the United Kingdom, the Bitcoin capital of the world. Holy shit. Elon Musk has put Bitcoin in his profile. What does this mean? I don't know. All waiting for clarity. But it was nice to see like a $6,000 candle this morning. Could be some big stuff bubbling. Anyway, welcome to the What Bitcoin Did podcast, which is brought to you by the Mighty Kraken, the best place to buy, sell and trade Bitcoin. I'm your host, Peter McCormack, and today I've got my monthly macro update with the amazing Lyn Alden. But before that, I do have a message from my show sponsors. Okay, today we're going to kick off with BlockFi, and I've been telling you for the last few weeks about their big announcement which happened before Christmas, that BlockFi is imminently launching a Bitcoin Rewards Visa credit card. I've been very, very excited about this. Excited by the idea that you can stack sats with every single card purchase. And with BlockFi's card, you will be able to earn a market-leading 1.5% rewards rate in Bitcoin on all card purchases. The waitlist registration is open for all registered BlockFi clients. So if you want to join the priority list, then you just need to open up a BlockFi account. There is a public waitlist which is going to open very soon as well. If you are interested in checking this out, then head over to BlockFi, but do your own research first. And that is at blockfi.com, which is blockfi.com. Next up, we have Kraken, my favorite place for buying and selling Bitcoin. And it is the only place I use for buying and selling Bitcoin. You want to know why, right? Why Kraken? Well, they are consistently rated the best and most secure crypto exchange, and as I tell you all the time, security is really important to me. They also have the best in class in customer service. So look, if you've got an issue and you reach out to Kraken, whoever you are, wherever you are, whatever that issue is, they're going to get that shit fixed for you. And if you want to start trading Bitcoin, they have every tool you could possibly need. So, whatever your level of experience, if you head over to kraken.com, it could not be easier to sign up and start trading Bitcoin. They also have a beautiful mobile first app, so you can trade Bitcoin on the go. And with their margin trading, futures and OTC desk, Kraken has every option covered for you. There is no better place to trade Bitcoin, and you can find out more at kraken.com or download the app. It's available for the iPhone and Android. Just search for Kraken Pro, which is KrakenPro. Okay, so on to the show today, and I have the amazing Lyn Alden back. I know you all love her. I love her too. She's amazing, and she is here to do our monthly macro review. So, since the last time Lyn was on, Bitcoin went on quite the tear. It hit $42,000 a couple of weeks ago, and since then has been consolidating, looking pretty stable in the 30k range before the Elon thing today, which sent it straight back up. Now, while Bitcoin had been cooling off, the big story in the markets this week certainly, and for the last couple of weeks, has been regarding Wall Street bets and GameStop. I don't believe anyone has not seen what crazy shit's been going on there. Now, the story came out of a subreddit in that Wall Street bets, people were picking highly shorted stocks and buying them in huge numbers. And this led to a massive short squeeze, with GameStop shooting up from about $16 to over $460 in a couple of weeks. And then everything went super crazy yesterday with Robinhood closing the ability to buy GameStop, and we've all been a bit suspicious about what this is. Now, this happened after my interview, so some of this is covered with Lyn, but I will also be covering this further. I'm actually going to make a Defiant show about it all, so you want to keep an eye out for that. But I did get Lyn's perspective on everything that was been happening here. Also, she recently did an economic analysis of Ethereum. That article's super interesting. It's worth reading. I questioned her on that as well. But as I said, this was recorded a few days ago, so the Robinhood story has gone a little bit crazy since then. Anyway, on to the show. If you've got any questions or feedback, you can reach out to me. It's hello@whatbitcoindid.com. I do reply to everyone. And also, I've got a brand new show out on Defiance. Go and check that out. It's about the end of the drug war. It's really interesting. It's produced by Tom. You can check that out at defiance.news. Have a great weekend, and I will see you all later next week. Lyn, I know it's end of January, but Happy New Year.
Yeah, you too.
Did you have a good break?
Yeah, pretty good. How about you?
Yeah, pretty good. So last time we spoke, Bitcoin had just set an all-time high, about 22,000 we were at when we last spoke. It was back in.
Yeah, I forget the exact number, but yeah, sometime in December, so it must have been a lot lower.
Yeah, and then we ran up to 42,000, and then we jumped down to like 20, 28 and a half, 29. Now we're quite comfortably back around 34,500 ish. How do you read all this? What's your take on all this?
Well, if you look at a lot of indicators, it was kind of near-term overbought by a number of indicators. And so it's not really surprising to see. We've also seen somewhat of a bounce in the dollar. And so, basically there might be a slight kind of risk off in some of these markets. So I think that's healthy. And for example, one thing you pointed out last time is like I think you asked like, do I miss going all in on it? And that's the type of thing why I prefer to kind of distribute in a couple different asset classes. So when we get those volatility events, it's more easily manageable.
Yeah, well, I am all in. I'm all in and more. But that suits me. I mean, I read your reports. They're excellent, by the way. If you're listening to this and you haven't checked out Lyn's reports, go in the show notes. You should check them out. They're amazing. But for me, it would be far too complicated to have such a diverse portfolio. I wouldn't even know where to start with managing it. It's just much easier to have one asset. It does put a lot of risk, but I like a bit of risk. Anyway, look, we've got lots to talk about. I do want to talk about the general market stuff because you always do an amazing job of explaining what's going on. But I do want to talk about Ethereum because you've kind of created some enemies, not on purpose. You've done one of the most detailed write-ups of Ethereum, which very, very good. And I've also read the reply from the Bankless team, but I do want to touch that. But let's start with the macro stuff. So from your side, kind of what's going on? What are you looking at right now?
Well, there's a couple different things. I mean, one is we're starting to see, extraordinarily high levels of speculation in markets.
Hmm.
And so, for example, if you look at, the valuations of unprofitable tech stocks, if you look at in the U.S. small trader call option buying, kind of Wall Street bets like Robinhood style, and that's just basically off the charts. I mean, we've never seen anything like this. You have to pretty much go back to like 1999 to find something anything kind of similar. And if you look at the put to call ratio, that's extraordinarily skewed, towards calls. And so basically, there's basically multiple indicators showing that people are kind of going all in. We're also seeing margin debt go up a lot, and so people are just kind of taking leverage, kind of option or leverage-based bets that the assets are likely to keep going up. And so those are always kind of tricky times because we are having kind of a currency issue at the moment. I mean, people they can go into assets or they can go into, for example, treasuries or bank accounts that are yielding less than inflation, right? So there's basically rock and a hard place. But whenever you get to a period where it's kind of over leveraged or overbought, the amount of risk in the environment goes up, for having some sort of volatility event or something like that. And we're also seeing a little bit of a bounce in the dollar compared to other currencies. And so if you look at, over the past, say, year, the dollar has been very inversely correlated to most risk assets. Whenever the dollar's falling, they're going up, and whenever the dollar kind of has like kind of a sideways consolidation or a little bit of a bounce, that's when you also tend to see a consolidation or a little bit of a pullback in some of those risk assets. And so that's something I'm monitoring at the moment.
All right, a couple of questions there because some people listening might not know. Can you just explain what a put and a call is so people listening understand, and then talk about what that ratio is that you talked about?
Yeah, so a call option is basically a contract where you basically agree that someone will sell you shares at a certain price. And so if it gets to expiration without the share price getting to your target price, that option expires worthless. And so it's not something you want. It's not something you buy and hold. It's something where you're making a specific bet that a stock or an ETF is going to go up to a certain price by a certain date. And so they're mostly short dated options. There are ones that stretch out to a year or more, but the vast majority of them are pulled forward to days, weeks, or months. And a put would be the opposite. You can basically it's another way of shorting a stock. Essentially, you can basically bet that the share price is going to go down by a certain period of time. But of course, a lot of people use that as hedging. So they might be long the market, and if they want to kind of de-risk a little bit, instead of selling their positions and generating capital gains, they could have a small put position to kind of offset some of their long position. So they tend to be a little bit more sophisticated used. And you can over time there's a couple things. One is you can look at the percentage of the volume that's being kind of moved by small traders buying call options, which is right now it's record highs. And then also you can look at the put to call ratio to see how many people are buying puts compared to how many people are buying calls. And it tends to be a contrarian indicator. So if a lot of people are buying calls, that ends up being a good time to buy puts. And if a lot of people are buying puts, that ends up being a good time to buy calls or simply go long the market.
How do they differ from futures?
Because it's a basically more of a leverage bet. So futures are you're betting on the direction of something and then you can lever it up. Whereas this, you're betting on like it's a contract that says, for example, let's say a share price is $100 right now, and I can say I want call options that are for a strike price of 120 3 months out, and I might pay $5. And if that share price goes up to like 150, I made a lot of multiple on the little $5 I put in.
Right.
But if it doesn't get to say it closes at $112 3 months from now, so it never got up there, my $5 then is just completely vanished. And so they can be used sophisticated because you can have a very small position. They can actually be used to reduce risk if you use them kind of in a sophisticated way, because instead of putting a large chunk of your portfolio in something, you can have a small bet that something's going to basically be asymmetric. But if they're used kind of just willy-nilly and you just kind of just go all in with these, they call YOLO calls, right? You just kind of say I'm going to put like a third of my net worth in like these call options. That either can ruin a portfolio or you can go up 10x. And that's the kind of speculation we're seeing at the moment.
The dollar thing's quite interesting as well because I'm looking at the chart here, and back in March 20, it was 86 pence to the dollar, and now we're at about 73 pence. For me, as somebody who's most of my clients are in America, that's actually not very good for me. I've lost, every month I'm essentially from that point. I mean, that was a bit of a spike, but I've lost about 10% of my income by the fall in the value of the dollar. What is actually going on with the dollar? You said there's a bit of a bounce right now.
Yeah, so if you look at specifically this past, say, month or so, so if you kind of go back to the whole year, so we had that big spike in March, and so the dollar index, which is the way that's because you're comparing basically one currency to another currency, whereas I'm referring to the dollar index, which is basically comparing the dollar
Okay.
to a basket of currencies. The euro is the biggest component, but the pound is in there, the yen is in there. So that peaked as something like 103 back in March during the heart of the liquidity shock and pandemic. And then when the Federal Reserve kind of released the floodgates, they released the kraken of liquidity, that came down pretty sharply. And so that fell back into the high 90s, and then it had some pretty disorderly declines. It touched down into the upper 80s at one point, and it had a couple consolidations. So, for example, this past summer, so it went down in the summer, but then it leveled off for a little bit, and that's where we got some kind of correction in some of these risk assets. We started to see oil stocks roll back down. We started to see all sorts of kind of things kind of go sideways a little bit, and then it kind of had another sharp decline, the dollar, and so that was another boom for risk assets. And lately we've been seeing again, it's back in the low 90s, so we're seeing a little bit of a bounce and a consolidation here, and that's normal because things just don't go straight up or down forever. But that's something that people can be aware of if they're trying to understand why certain positions might have some turbulence.
So it sounds like to me you say there's a lot of leverage, there's a lot of margin debt, there's this ratio of the put to calls. So it seems to imply that you're saying there's a lot of risk taken. Is this a typical thing early in the year, or is this a response to something else?
So if you look at the charts, this is actually pretty unprecedented.
Okay.
It seems to be tied to the massive amount of stimulus. And so if you look back prior to March 2020, we started to see some overheating back in kind of late 2019, but it wasn't very significant. And then it all got kind of wrecked in March of 2020. But then in the months that followed, when you had stimulus checks go out and you had all of this kind of money supply go up 26% year over year, then you started to see this massive kind of vertical boom in the amount of call options and the amount of kind of penny stocks being traded. Pretty much anywhere you look for ways to quantify how much speculation is happening, all of those just went vertical to places we haven't seen for at least 10 years, and in some cases all-time highs.
So we're just in crazy season still.
Yeah, pretty much.
When does this end? It feels like we are heading towards some kind of financial implosion.
Well, that's always the tricky thing. For example, if people were monitoring what was happening in the late 90s, there are multiple parts where it was excessive, and then it got even more excessive. And so you never kind of know ahead of time when exactly it's going to roll over. It could be that, stimulus stops coming out or transforms from, for example, stimulus checks to infrastructure or something like that. And so it's kind of a slower money that doesn't just kind of enter into Robinhood accounts. Basically there could be various shocks along the way that just kind of exhaust the amount of money being poured into markets. And it's one of those things where while it's going up, it's a virtuous cycle, so it feeds on itself and kind of pushes higher than you think. But then if that were to reverse for any reason, that can plummet pretty hard. And I think it's important to separate what's going to happen with kind of high quality assets that are appropriately priced compared to some things that are kind of just bid up from pure speculation. We're also seeing Wall Street bets, for example, they're targeting stocks that are highly shorted, which is it's actually a pretty smart strategy. The SEC might eventually be looking at that sort of thing because it's kind of coordinated behavior in markets. But for example, if you look at the company GameStop, which is a
Hmm.
kind of a classic retail kind of it's being displaced by the digital distribution of video games and things like that. But it was a highly shorted stock. And it's another contrarian indicator that stocks that are too highly shorted end up, if they have a bounce, it means that some of those people shorting it have to cover their shorts, meaning they have to buy the shares. And so, for example, if you look back a decade ago, Volkswagen briefly became the most valuable company in the world
Yeah, I remember
because its
that.
share prices, yeah, it's a massive short squeeze. And we're seeing like a smaller scale, but something similar with GameStop, where it's up dramatically because all these people are piled into it on the short side. And then, a bunch of these Redditors saw that and said, well, let's just all buy calls and let's all buy shares and just drive the price up and force them to keep covering. And then it becomes a then even more people have to cover and then people can keep buying until it kind of hits a breaking point and kind of just has this vertical blow off top.
So what would you say right now then is appropriately priced? Like if people were listening to this and they're thinking where to invest, I'm obviously telling people in terms of Bitcoin. People might not have like the sophistication that you have, but like where are things appropriately priced? Because I think stocks right now are a very hard thing for somebody who isn't experienced in the market to come and invest in.
I think from like say a 5-year perspective, I think a number of non-US equities are reasonably priced. And in general, both in the US and elsewhere, stocks that are more on the value side of the spectrum are reasonably priced, and that's where people will debate whether or not they should be like should they be cheap or should they be or are they dying? For example, you can have something called a value trap where everyone says, oh, look, it's cheap, it's got low price to book, low price to earnings, but then those earnings just kind of bleed out and the industry's dying and then it's over. Or, if you look back in history, if you look at high quality companies when they get cheap, that tends to be a good time to buy. And so I'm seeing that some of the more cyclical industrial type of things, they tend to be pretty cheap at the moment. And anything that's kind of outside the United States in the form of the equity market. So, for example, there are really high quality Japanese stocks that are trading pretty cheaply. There are emerging market stocks that are trading pretty cheaply. That's where the areas tend to be because a lot of capital has kind of concentrated in U.S. equity markets. Now, it's different for real estate because real estate is not liquid, and so a lot of those markets that have fairly cheap equity markets tend to have highly priced real estate markets. And so specifically the equity markets in some of these non-US places, are more reasonably priced. A number of commodities I think are still reasonably priced. We've had a big run up. And so I wouldn't be surprised to see, pullbacks or consolidations, but from like a historical perspective compared to other things like, US equities or something like that, commodities tend to be pretty cheap at the moment. And of course, I remain bullish on Bitcoin. That's, you can't necessarily call that expensive or cheap, but as kind of a percentage of, what I think it could grow into, I would still classify that as, a positive asymmetric bet.
Have you bought any more Bitcoin?
Yeah, I've been dollar cost averaging a little bit.
Good. While Michael Saylor $1 million cost averaged in, and was it 10 million he put in the other day? Okay,
I think so.
what about in response to the Biden administration? What are you seeing in response to what are you seeing with regards to policy from then? How are you reacting to that? What can we take from their administration so far? Obviously, we've seen there's a potential for huge stimulus plans. I've also read about them cancelling this pipeline. That's going to have an impact on jobs in the oil industry. What read are you taking from like the early days of the Biden administration?
It's pretty early to tell so far, but basically they're looking for kind of a multi-trillion-dollar stimulus package, and so that includes, faster money up front, and then they want to get into more infrastructure stuff, and that includes green energy. That includes all sorts of things. He also, I mean, they're moving to kind of reduce the amount of oil that can be drilled on federal lands. Last I checked, that's something like 10% of U.S. production. But there's always kind of like nuance to stories. So for example, a lot of the drillers already have permits to drill on federal land. And so just because they don't issue new permits doesn't mean that, tomorrow drilling on federal land stops. It means that it kind of, over the next kind of 3 to 4 years, that if they were to keep that freeze in place that whole time, that would drop off over time, and therefore U.S. energy production would maybe level out or decline because they'd only be able to drill on privately owned land. And
Mm.
so that's kind of one thing I'm watching. You mentioned the pipeline as well, and I think the biggest news as it affects the dollar or markets is what they're going to do with stimulus. Because so far the United States has done more stimulus as a percentage of GDP than most other countries, and they still seem to feel the need to do more. And because if you look at who's kind of impacted, there are still tons of people out of jobs, and so that creates a social political aspect. We've seen, for example, rising tensions, different types of populism, both from the left and the right. People express their frustration in different ways, and so they're looking to do another round of stimulus checks, and then pile on top of that over time more and more kind of infrastructure or green energy things. And so a couple of things to watch is that the Senate is really split because it's 50 people that caucus with the Democrats, 50 people that caucus with the Republicans, and then in that situation, the vice president is the tiebreaker vote. But there are, for example, a handful of Democrats that lean more conservative. And
Okay.
so it's not like, we don't, for example, have, the progressive wing versus the conservative wing. It's not like, the left side of the spectrum is completely in control of the Senate. It's actually kind of a centrist Senate. And so it's going to be interesting to see what Joe Biden is able to get through that group.
Another interesting thing I found in your report, which I've read, and I don't want to take too much from it because I think other people should go and subscribe and read it. But at the same time, when you talked about COVID or you talked about post-COVID, that it might actually, because people talk about this, return to normal, but you talked about the fact that we might have a fundamentally different economy. We won't essentially, may not return to the same old world. I think one of the big impacts is obviously in terms of geography. People can feel like they can live anywhere, feel like they can set up business anywhere. We've seen what's happening with the mayor of Miami, drawing people in. I think I just read today Peter Thiel bought 2 properties there. We're also seeing this migration of people to Austin and to Wyoming. And what other things are you looking at in terms of like a post-COVID world? What other kind of dynamic changes are you expecting or let's say looking out for?
Yeah, it depends on what time frame you look for. And so, the harsh reality from the beginning is that the amount of jobs to get back to the number of jobs we had in recessions, that normally takes years. And this was a bigger decline than most. And different countries, of course, have different metrics. So, for example, the United States had a pretty sharp decline in jobs. And so it's going to take a long time to work that back. And so, in the meantime, there's a lot of tensions, especially because we've seen kind of that they keep calling it the K-shaped recovery, where if you can work from home, if you work in tech, if you have a higher income situation, you're generally pretty okay. Whereas if you were working in a blue collar kind of hands-on capacity, you tended to suffer more. Or if you were running a small business that was reliant on having a physical presence. And so we're seeing kind of a somewhat permanent destruction in small businesses. So for example, it's not like every restaurant that closed is going to reopen. So that's kind of a really big challenge there. And then beyond that, we are seeing, as people can work from home more, we're seeing less of an interest in working in kind of these key hubs like New York or San Francisco, and more willingness to move to secondary cities, or in some cases more rural areas. But especially, those secondary cities that have far cheaper places to live, while also because of things like Zoom and other things like that, they still have full access for the most part. We're also probably seeing some impacts on business travel for similar reasons, where leisure travel is likely to bounce back because that's not something that can be replicated on Zoom, whereas business travel, at least a percentage of it could be displaced. And so there's always people going to want to go to conferences and network in person, or go to business dinners, basically interface with executives real time. But there's a percentage of kind of more kind of grindy corporate work that can be done remotely.
Well, yeah, I mean, I used to travel relentlessly with work prior to COVID. Every other month, I would be away for 2 to 3 weeks. I'm certainly not returning to that, to the additional costs I've adjusted. I think once you've adjusted your business and you've come to terms with this new world, like why bring back that cost? I mean, I do want to travel, but not like I used to. Are we seeing anything in terms of inflation numbers? Because I know here in the UK we aren't seeing We haven't seen a huge growth in the inflation numbers, but we do have record borrowing. I think the last month was the third biggest since like World War II. But what we are seeing is things like, for example, house prices here seem to be going up quite significantly. Are you seeing anything in inflation? Is there ways that government are hiding inflation numbers?
So we're primarily seeing asset price inflation. And so anything that's kind of considered like a financial asset, like, real estate, equities, digital assets in this case, all sorts of different assets that people can own and consider kind of a long-term financial thing, those have basically been skyrocketing. And so, for example, if you look at, Apple stock, for example, that's not just in terms of price, but in terms of actual valuation, like price to earnings ratios or price to sales ratios, is far more expensive than it was 12 to 18 months ago. And so basically, people have just reevaluated that and being willing to pay a much higher price for it because they don't want to be in cash or they think it's going to keep going higher, whatever the case may be, depending on the trader in question. And we're starting to see some inflation around the margin. So, for example, we're seeing commodity prices start to wake up, and so copper's up to like something like an 8-year high, iron's up, beef is at all-time highs and twice as expensive as it was 2 years ago. Back then, 2 years ago, it was also at all-time highs, and so it's not like it was a big dip that it increased from. It was already expensive 2 years ago, and it just doubled. And so we are starting to see some of that. We're also seeing the cost of shipping on a
Yeah.
container ship. Yeah, that it basically went vertical. If you look at the price to ships,
Hmm.
container ships from China to UK or to United States, that absolutely went vertical because of a shortage. And so we're starting to see kind of a combination of supply chain limitations running into the fact that money supply increased by 10, 15, 20% or more, depending on what country you're talking about. We are starting to see that. The one thing that's really holding down, or the two things that are really holding down official CPI are one is that oil and gas prices are still quite low, and those are that commodity market is far larger than other commodities, and so that kind of trickles into all sorts of manufactured goods and things like that. And so as long as that, until that were to tick up, that can help keep inflation modest. And then two, because we're seeing kind of a destruction in some of these service sector jobs, we don't see a lot of people just kind of spending super freely. Now you see a subset of people speculating on markets if they're already comfortable, but you don't see a lot of people that are kind of, living paycheck to paycheck going out and buying stuff because they're having enough trouble as it is paying rent. And so we're not seeing kind of that really broad uptick in energy prices or general spending, but we're seeing it kind of in all the places where it otherwise can show up, like financial assets and X energy commodities.
Okay, I've got two questions. I saw your mention of the shipping cost, but I also saw an article in the UK that the cost of shipping a container from the from China to the UK, I think it's gone up from £1,800 to around 10,000, which is
Yep.
massive increase. And I specifically read about a lady in her business that she has her lighting business. She has the light fixtures manufactured in China, and essentially she can't make a profit now, which kind of blew my mind. So first question is, why are these shipping costs gone up? But the second question I have is just a separate one. When you talked about Apple stocks and people putting money into Apple stocks, look, I don't trade stocks and shares. I've looked at it before a few years ago, and what I would do is I would spend time, reading the Financial Times and looking on websites and trying to find tips, and I would do a little bit of research, try and understand what is cheap and what is overvalued. With things like Robinhood, have we essentially removed the friction to investing in stocks? And have we essentially flooded the market with lots of inexperienced investors? We now have TikTok investors, which blows my mind. And essentially, is it a much more immature market now? And therefore, is this why the prices are being inflated?
Yeah, definitely to some extent. So, for example, if you look at over the past decade, we didn't see a lot of retail participation in markets. There's a lot of institutional, there's a lot of corporations buying their own shares back, but we didn't really see that frenzy. The last time we saw that kind of the retail frenzy was in the late 90s. And so for the first time, we started to see that. And that started to show up a little bit in 2018, 2019, because as you point out, Robinhood reduced the friction. And that, of course, spread to now it's pretty common, at least in the U.S. and some other countries, to have zero commission trades. And so you see some of the smaller investors kind of flipping around in stocks a lot more than they used to. So you started to see the number of trades go up in 2018, 2019, but 2020 went completely vertical. They basically like quadrupled or quintupled. Like it wasn't say a 50% increase; it was like a multiple increase. And so that's the combination of that frictionless access point plus, just, basically this flood of liquidity coming out, people getting checks, and then they kind of treat the checks differently than if they had earned them. It's just kind of if you just kind of get this thing, you're like, well, I mean, the market's going up, I don't want to be left behind, and so you put in the market, and so we're kind of seeing some of that behavior. And your other question about shipping containers, so that's like kind of a niche thing, and so there are people that are experts on the shipping industry that can kind of dive into that more than I have. I haven't done a deep dive on that particular issue, but my understanding is that it's basically related to supply limitations of
Okay.
those containers. And so it could have been COVID related. It could have been that supply chains are reorganizing. I don't have the specific reason, but when you have that bottleneck, and then you have that that demand is kind of comes back, and you have kind of money supply growing pretty substantially. If you have an inelastic supply, then the price can just go up 3x, 4x, and that's kind of what we've seen.
Crazy. Next up, I talked to Lyn more about Bitcoin and the macro side of things. But before that, I've got a message from my amazing show sponsors. Okay, we're going to kick off with Casa. As you know, they are the very fucking best in Bitcoin security. I've been a customer for over 8 months now. I absolutely love it. So much peace of mind that my Bitcoin is protected from me doing stupid things, which I'm really capable of, but also in-person attacks, device failure, and all the things that can get you in trouble with your Bitcoin. I am protected. I love Casa. You should be checking Casa out for your Bitcoin. And you know what? They've got a product for every Bitcoiner. So with Casa Gold, you get triple the security of a hardware wallet, and that is only going to cost you $10 a month. If you want Casa Platinum, you will get their 3 of 5 multi-sig. Now, this is the best protection for large Bitcoin holders. It does also come at a really great price. And their full service offering, Casa Diamond, which will get you a personalized, customized security review. They will help you with your inheritance planning, and of course you get their best in class in security. There is no better time to get your shit together with your Bitcoin security and have the peace of mind that I have. You can find out more at keys.casa, which is keys.casa. Also, my newest sponsor, they've been with me nearly a month now, it's Exodus Wallet. Have you checked them out yet? I'm absolutely loving Exodus Wallet. Now, I am increasingly running my company on Bitcoin. I get paid in Bitcoin. I pay people in Bitcoin. And I needed a wallet that I could use at the end of each month that I could settle all my balances with. And when Exodus reached out to me, I was intrigued. I checked it out. And you know what? I talk about this a lot. UX is important to me, and they've crushed it. So it's the perfect wallet for me. I'm mainly using their desktop wallet, but they also have a very cool mobile wallet too. Now, if you want to find out more, just Google Exodus, head over to exodus.io, or search the Google or Apple app stores for Exodus. And this week, we're going to be finishing with sportsbet.io. Now, I love these guys because I love football, and I love having a little wager on the games. And with sportsbet.io, it's really cool because they accept Bitcoin, and they're doing everything they can to promote Bitcoin. They put a Bitcoin logo on the front of a Southampton shirt, and they are also the betting partner of Arsenal. Now with Sportsbet, they have every market you could possibly want to wager on. They've got football, they've got tennis, they've got US sports, motorsports, they've even got esports. Everything you want is there. And if you're a new customer, they always have a range of promotions available. Just head over to sportsbet.io/promotions and you can find out more. That's sportsbet.io/promotions. All right, so I want to talk a little bit about Bitcoin before we get into Ethereum. Again, like amazing. I felt like Bitcoin over 30,000 has felt fairly stable. I know we had a big drop, but I still feel like it's been fairly stable. I didn't have any fear myself to sell. My dad tends to phone me every couple of days and panic and say, Pete, it's fallen from 42,000 to 30. What's going on? I'm like, Dad, we were at less than 10,000 a few months ago. But it feels pretty stable. It does also still feel to be very, very much driven by an institutional interest. Grayscale are buying a lot. What's your read on it right now?
Yes, we started to see a consolidation. We had that correction at first, and then we started to kind of level out. And then we had that kind of perfect storm. We had a number of central bankers or officials kind of come out and, say it's associated with legal activity and needs to be clamped down upon. So that probably wasn't great for the narrative for a couple of days. And then we saw inaccurate reporting about the double spend situation, which was it was just a block reorganization that kind of got misunderstood by the media. And so that seemed to have coincided with that really sharp kind of capitulation that we had. And it's been bouncing back. And so it's kind of important to watch. Now, most of the indicators that are kind of commonplace during these bull markets, they still look reasonably healthy. And so, for example, if you look at the percentage of Bitcoins that haven't moved in over a year, for example, that still indicates kind of mid-bull market. If you look at some of the overbought indicators, like say market capitalization compared to realized capitalization, those were looking somewhat heated before the correction because we had that really sharp run up from just December into early January, but they weren't looking say like blow off top kind of having cycle high. They were just looking kind of like correction territory, and so we did kind of let off some of the steam there and return down to levels that it can start building up from again. And of course, it remains to be seen if that's going to happen, but we are still seeing strong institutional buying. And Grayscale had this thing where they were on a hiatus, where they weren't buying. They tend to
Yeah.
do that sometimes, but they started buying again, and they've had kind of some record inflows. At the same time, Michael Saylor's getting ready to host that conference to basically shill the idea of Bitcoin to corporate treasuries to basically kind of give his playbook and his pitch on why they should have I don't think that they're going to go all in like he did, but basically kind of like why they should be more like Square and have Bitcoin on their balance sheet somewhere.
Yeah, well, we had another one announced today, and also he's really upset Peter Schiff again. Peter Schiff's not very happy about this conference that he's going to be doing, but look, it is what it is. Um, I, I feel like it's very structurally similar to the market back in 2017. Crypto Cobain put out a chart where it was very, very similar chart to 2017. This first 30% drop. I feel like the market is pretty strong, but this increase in FUD is quite interesting. Is the volume that's come out, because it isn't just with regards to the double spend FUD, or it isn't just with regards to the central banks. But we've seen an increase in articles from the likes, well, in the UK, the Times, the Guardian, the Telegraph, right, and just nonsense articles. And we've seen a massive increase in this, and it's really frustrating. But I guess sign of the market, similar to how you and my replies are full of Winklevoss promotions and Elon Musk promotions, which is it's relentless. With regards to the Tether stuff, how much have you looked at that?
So I've looked at it pretty significantly,
Right.
and it's just kind of it's interesting to watch because that came around last time too. I wasn't really active in the the crypto space back then, but just from history that came up again, and so we are starting to see that. If actually I've gotten so many emails about that
I
that I
bet.
basically have a template email that I just kind of have, so I don't have to rewrite a response every time. And so that kind of shows the amount of kind of fear in the market about that, or at least a segment, because that article seems to have gone pretty viral. That definitely kind of touched a lot of nerves of people. And
The article that's from an anonymous person who managed to buy the bottom and sell the top.
well, maybe he's buying back now. That's the
Yeah.
thing. You don't know who's kind of putting out that information. But basically, what we've seen from Tether is, they, you know, like most stable coins, they claim to be backed. What exactly that's backing it is kind of open up for questions. We're seeing the legal action against them to some extent. But it kind of, the overall kind of arguments range from the extreme to the mild. So, the mild cases are pretty, acceptable. It's like, they should be audited. Do they have 100% backing? What does the backing consist of? Things like that, right? So, is that something that people should use? But then when you get into kind of the extreme end of the side, it's the claim that nothing is going in. They're purely just printing tens of billions of dollars worth of tether, and that's entirely responsible for blowing up the Bitcoin price. Even though if you just look over the past year, Grayscale alone pretty much bought as many Bitcoins as were mined that year. And then if you add MicroStrategy and PayPal and Cash App and all these others that are just kind of buying and putting it into cold storage, that had to come from the existing market, because they bought more than were mined by a significant percentage. And so that had to come from existing holders. And so you had that natural kind of supply demand characteristic. And so I think it's normal. I think, some degree of FUD is healthy, right? Because otherwise you get this euphoria, you get this, you kind of pull forward all the gains, you get this blow off top, and then you have this, big problem. But as it, they call it the wall of worry. And it applies to stocks, it applies to pretty much any type of asset that is in a healthy bull market, that it goes up and then you have some concerns and you have a pullback and it goes up again, you have more concerns and people kind of debating about the valuation, debating about the merits of the asset. And we're starting to see that to some extent where people are I'm getting emails about quantum computing, emails about Tether, emails about what if it's banned, all sorts of things. And some of that is healthy, except when it goes viral and people kind of, panic sell. And we actually saw, for example, when Michael Saylor bought that dip, there was actually another company that sold
I
a couple
know.
$1 million worth of Bitcoin, and they
Oh,
had just bought it like a month ago.
yeah.
Yeah,
They made two
they
hundred
yeah,
thousand
so they
dollars
were
profit.
yeah, so they were, I guess, kind of a weaker hand that, I think they cited the supposed double spend attack without realizing it's a block confirmation issue. Like their block reorgs happen, and if you want to have a payment be finalized, you have to wait a certain number of blocks.
Yeah. Institutionally weak hands, I called those. I thought that's kind of interesting, but probably the wrong company to be buying Bitcoin if they're going to panic in that way.
Yeah.
Okay, very interesting. I should probably, if you've got those templates ready, can I just forward all my emails that I get to you then, and you can reply to them?
Hopefully not.
I get the
It's
same.
so many.
I get the same ones. I get the quantum ones. I get the same. Today was minor centralization. I've also been talking to Mike Green. Did you listen to his show with Nick Carter yet?
I got the first half. I
Yeah.
didn't get a chance to see the second half.
Second half is mainly Tether. I thought it was interesting chat.
Yeah, I mean the first half that I listened to was not about kind of is Bitcoin going to be successful? It was more like whether or not it should be successful. I mean,
Yeah.
Mike Green's argument seems to be that he doesn't want it to be successful. He thinks it would be bad if it were successful, rather than that he think it won't be. It was more of a moral argument than anything else.
Yeah, well, he feels it's a risk to the US dollar.
Yeah, he feels it's a risk to the dollar. He feels it was unfairly distributed. He had a number of kind of
Mm,
points that he felt it was that are more moral in his view rather than say math based or kind of a an assessment of what the market's going to do.
yeah. Well, I mean, I felt like his giveaway was when he said if he'd listened to his wife's opinion, he would be on the same side of the table as Nick, which kind of irks back to that height thing in The Righteous Mind where he talks about people tend to shoot from the hip and then post-rationalize. I think he's probably kind of was an indication that he was a bit disappointed that he hadn't invested. But look, is what it is. I thought it was a good show. Okay, let's talk about Ethereum. You dived in, took a good look at Ethereum. So I can imagine, Lyn, if you felt like it was a good investment, you would invest. You're not ideologically opposed to investing like maybe someone like I am. I'm just Bitcoin only. That's it. You can't convince me of anything else. My assumption is that if you felt like you thought it was a good long-term investment, you would. Am I wrong?
Yeah. So, for example, I think that utility protocols in some way are going to be here for a while.
Yeah.
And so, for example, I think the stable coin usage will probably increase over time. There will be kind of different sort of smart contract applications that will likely be here in some form. And then the question is which ones will stick around, whether or not their tokens will achieve some sort of moneyness, right? So will they kind of be viewed as money, or will they be viewed more like a commodity? And so I kind of just explored that question. And, so it's basically, if you look at, the whole digital asset kind of ecosystem, Bitcoin is head and shoulders over any other token that's trying to be money.
Hmm.
So for most of those other ones are in some cases less than 1% of Bitcoin's market capitalization. Sometimes they're say 1.5%. They're all kind of a very, very tiny percentage of the security, the distribution, whatever kind of network effect you want to use to measure that. The only other kind of asset that's in the same ballpark would be Ethereum, in the sense
Hmm.
that its market capitalization is sizable. It's still notably lower. The amount of kind of volume settled or value settled on Ethereum has eclipsed Bitcoin because it's used for those stable coins, so it's used for its velocity is far higher, and therefore it's used for that. And naturally I get a lot of emails about Ethereum because I've explained multiple times why I'm long Bitcoin, why I have articles on Bitcoin, and so naturally I get a number of questions like, what about Ethereum? Are you going to invest in Ethereum? Do you like Ethereum? And so I was like, let me just like write an article and just kind of analyze Ethereum and say my views on it. And so it wasn't saying outright negative. I wasn't saying Ethereum's going to go down. It's bad. It's more like here's some of the pros and cons of Ethereum, and that I think some investors could put most of their portfolio in Bitcoin and have kind of a side bit in Ethereum. I don't think it's irrational for people that are following that market to do that. I think that would make sense for them. But for my case, I haven't seen kind of a really good kind of risk reward for Ethereum because it's still, it's changing the underlying, mechanism for how the protocol works. They're shifting from proof of work to proof of stake. They're changing their monetary policy. They're potentially sharding it where they have multiple parallel chains that are kind of linked to a beacon chain. but then now they're looking at they're doing roll ups, and there's all sorts of different scaling mechanisms because they are running into their throughput limit. And so, basically, I was just trying to highlight to people that sure, it could be a healthy ecosystem, it could take off, but you have to understand the risks there. It's not kind of this more finished product. It's more of this experimental product, and I just didn't want people to kind of go into an alt season without understanding the risks they get into when they try to trade all of these non-Bitcoin protocols.
Yeah, and even in an alt season, people can make money whilst the protocol itself might not have any meaningful long-term usage. But the term that really stood out when reading your report was that it's a big circular speculative party. So firstly, I'd obviously want you to explain why you think it's a big circular speculative party, but then also in some ways, isn't Bitcoin the speculative party?
To some extent, yeah. So any sort of kind of network effect has that kind of circular notion where the more people use it, the better it does. My point with Ethereum is that it's highly used for leverage and kind of these shorter term bets. And so, for example, if you look at what's all the money that's locked in DeFi, for example,
Mm-hmm.
a lot of that is you have decentralized exchanges, and so that's its own thing. Then you have liquidity or leverage providers for those exchanges. And so some people can deposit stable coins, for example, and collect interest on them. And the other side of that is they're basically borrowing, stable coins at a pretty high interest rate. And then, some of them could be using that for life expenses, but many of them are using it to speculate on different sorts of tokens, using that as their, to have a leverage play on different sort of tokens. And especially because some of those tokens are, you know, lower market capitalization altcoins, it's got a substantial amount of risk and speculation. And so when you're in that bull market, you can see, the amount of leverage builds up. The amount of kind of the yields can be high. It's this attractive situation. But if that were to turn down into a kind of an alt season, the opposite of that, a bear market in alts, that's where some of that leverage could become very painful. And we saw a hint of that back in March,
Mm-hmm.
where you had that liquidity issue and you had some kind of liquidations. But that it's a much higher level now. The amount of money locked in DeFi is far higher. And so if you were to get that kind of a sharp pullback in some of these, even Bitcoin, but let alone if you get Bitcoin and these other ones, and if you kind of go into a bear market, that's a more sensitive area that could be impacted. And kind of like how if you look at just equities, so it's not even unique to DeFi. If you look at equities, those periods where the bull market's happening and the margin's going up, that feels really good while it's happening. And it's just you have to make sure that when that party ends and is turned over, some things end up being steady and they kind of they correct, but then they bounce back, and other things that were mostly bid up due to margin or due to other things, they have a tendency to suffer more. And so we'll see what happens. For example, back in the previous bull run, Ethereum outperformed to the upside and then underperformed to the downside on the other direction. And we'll see if that happens again, or every cycle kind of is going to have its own unique characteristics.
Yeah, there's a couple of other things I found quite interesting. A couple other quotes from you. Firstly, that it's more expensive to run lines of code on Ethereum than say Amazon Web Services. So I thought that was kind of interesting because essentially you're paying the premium for this decentralized service, but at
Yeah.
the same time, how meaningful is it decentralized? Because again, you pointed out the infura risk and the potential if there was a government crackdown. It's not like with Bitcoin where I think we're all in agreement it's impossible for there to be a government crackdown on Bitcoin in terms of you can legislate against people using it, but you can't switch all the nodes off on the network. So how big a risk did you think this is, and do you think Ethereum is meaningfully decentralized or even should be considered as a decentralized project?
I think it's a step towards decentralization. It's more decentralized than some of the things that came before it, but it's less decentralized than it otherwise could be. And so
Right.
I would actually describe. I think in some ways permissionless is a better way to describe it than decentralized
Hmm.
because it's more decentralized for the user side, and so you don't need permission to, for example, use DeFi. So it's permissionless for the user, and that's the side of decentralization that it has improved. And then the part that's still somewhat centralized is the clustering of the infrastructure to provide that to users. And so it's somewhat vulnerable to a government crackdown if you were to get kind of a focus on it.
You didn't even think it was worth putting a very small amount of your portfolio into it.
I mean, maybe as a side bet, I can see why, like even in the article, I point out that, 80-20, 90-10, or 100-0 all make sense to me. And, my preference is to focus on Bitcoin at this time. I think the risk reward is good there. Now, during a bull run, that doesn't mean I think that Bitcoin will be the best performing of these assets. I mean, generally there will be various alts, perhaps Ethereum itself, that outperform Bitcoin to the upside, kind of like what we saw in 2020, where, for example, Ethereum outperformed Bitcoin. And so I even said in the article that if it goes over 1400 decisively, I wouldn't be surprised to see, some pretty bullish action on Ethereum's price. The question is more about the long-term value of that project and if they're going to successfully navigate some of those transitions from Ethereum 1.0 to Ethereum 2.0. It's kind of like changing the engine of a car while you're running it. So it's a very complex challenge to do. And so this the risk reward is to me some extent less attractive. But yeah, I fully see why people want to have a percentage of their portfolio in Ethereum. People should just understand what they're getting into with these different assets.
I think also it's the timing of the entry and exit, which is quite difficult. It might outperform for a few months, or it might outperform for a month here or a month there. For me, I just feel a lot more comfortable during a bull market to be up, like fully in Bitcoin. For me, it's too much of a risk. I mean, I'm not keen on the project, but I'm not like a full maxi opposed to anyone else investing if they want to do that. I do see the value of the stable coins on the network, but yeah, it was quite interesting. What did you make of the reply from the bankless guys? Do you think they made a fair reply? Do you think they were kind of rationalizing things?
Well, I think, it always depends on your perspective. And so, I think the most of them were very polite and they basically put
Not
forth
all of
their
them.
their reply. Yeah, not all of them. But I think well the bankless guys were the two that run that
Hmm.
platform. But and you get down into the Twitterverse, and then sure you get into the
The
far
dicks.
less polite, yeah, the less polite people. But yeah, so part of their response didn't really refute the initial thing. I mean, some things they agreed with. They're like, it's experimental, but that's why, you should invest now and it'll go up more if it is successful. So it's kind of reframing it more towards that bullish view. I think one of the big sticking points is whether or not the tokens will be monetized. And so, for example, there was a paper back in 2017 by John Pfeffer that
Yeah, I love that one.
argued that some of these utility protocols that the velocity can be so high if the tokens don't acquire some sort of moneyness, that even though the ecosystem could be very large, that not the market capitalization or the per token value might not follow that trajectory. And to some extent, that's what we've seen. For example, over the past 3 years, Ethereum's settlement volume went up dramatically and even outpaced Bitcoin, whereas its market capitalization has not caught up to that same degree. And so if you're looking at it from the Ethereum bullish side, you say, well, that's because Ethereum's undervalued and Ethereum's going to catch up and it's going to, outperform. But if you're looking at it from that, say, that John Pfeffer view, you're saying, no, that's to be expected because it's, the tokens aren't money to the same degree that, say, Bitcoin is. And so the ecosystem can grow a lot faster than the per token value because there's higher velocity in the system. And the Ethereum counter argument to that is that the combination of staking, if they get Ethereum 2.0 working, that's basically a liquidity sink. That's an incentive to hodl for them to earn yield. And two, that Ethereum can be used as collateral in these DeFi or these different sort of markets, and that those would be sufficient liquidity sinks to basically monetize Ethereum. And so we'll see if that plays out or not. But because it's a somewhat more speculative thing because Ethereum 2.0 is not finished yet, so staking is more of this kind of it's one-way staking at the moment where people are kind of putting into Ethereum 2.0 in the hopes that the developers will roll that out in a reasonable time frame in a year or two. And so it kind of remains to be seen to what extent these utility protocols can monetize. In the meantime, because we're seeing somewhat higher transaction fees on Ethereum, we are starting to see, for example, more Tether now transactions occur on Tron than on Ethereum because some of the smaller transactions have spilled over due to the high fees. And so we're seeing this competition between utility protocols at a time when Ethereum's kind of changing itself substantially. And so I think there's certainly upside potential there, but there's also a lot of risk because unlike Bitcoin, it's mostly a steady state project that's just getting security and privacy updates over time, whereas Ethereum's still a rapidly evolving system. It's more of like a tech stock than like a money at the moment.
Right. Okay. Well, I'm not going to invest. Anyway, Lyn, always lovely to catch up with you. Always learn so much. Before we close out, two things. Just tell people where they can sign up to your newsletter and give me a Bitcoin price target for the year.
So I'm at lynalden.com. People can check that out. And so I don't have a firm price target in Bitcoin. However, the metrics still look, quite attractive as far as kind of a mid-cycle bull run goes. And so I wouldn't be surprised to see, well over 50,000 this year. And the upper end of that is, I like you hear some of these really high targets, and it is hard to put those aside because, for example, so far Bitcoin is outperforming its 2017 having 2016, 2017 halving period, and it's so far kind of above that. And so we'll see if that streak continues or not. And so rather than having kind of an end price target, I just continue to monitor it as it goes.
Fantastic. Well, listen, good to see you, and I will see you in about 4 weeks. Take care.
Yep. Bye.
Okay. What do you think of that one? Did you enjoy that one? I know you did. You all love Lyn. I love Lyn. She's fucking amazing. It's always good sitting down to her, especially when there's some crazy stuff going on that I need to pick her brain on. With all this crazy stuff that's been going on with Wall Street bets, I really, really wanted her take. Also, with all the FUD around Tether, block reorgs, or just poor reporting in the mainstream media, it's good to hear that Lyn remains very bullish on Bitcoin, and she thinks we're mid-cycle. And if you're thinking of dipping into shitcoins or looking at Ethereum, make sure you read Lyn's economic analysis of Ethereum in her article. There's a link to that in the show notes. It may make you think twice. Anyway, Lyn will be back next month for another update. I'm sure we'll have a load more crazy shit to talk about. If you do have any questions about the show, if you want to reach out to me, my email address is hello@whatbitcoindid.com. As I say, I reply to everyone, so do feel free to reach out. I'm getting a lot of emails these days. Just don't send me any weird shit. Don't ask me for any investment or trading advice. But if you've got any other questions, do reach out to me. I will get back to you eventually. If you do want to support my show, please go over to iTunes or Apple Podcasts and leave me a review. If you're not on Apple, Pocket Cast or Stitcher, they're all helpful. They help with the ranking of the show, so I'd appreciate it if you can do that. Also, go and check out Defiance. As I said in the intro, there's a really cool new show that was produced by Tom there. It's about the end of the drug war. That's definitely worth checking out. That's at defiance.news. Big weekend ahead. Some crazy shit's going to go on, I'm sure. I will be back. Actually, I'm back on Sunday. Final show of the month. I've got a show with Willy Woo, so make sure you check that out. Have a great weekend. Love you all, and I'll see you all soon.